Hi everyone, and thank you for joining us for today's August Trade Floor Update. My name's David Erdemes, and today I'm joined by Portfolio Manager Adam Bowe. Adam, thanks for joining us.
Thanks for having me, David.
Adam, if we think back to the July RBA meeting, there was obviously a lot to look forward to in terms of the announcements that were due to come out of that meeting. Since that time, we've had lockdowns across the country with a spike in the Delta variant. How did we see the August meeting, and what were some of the takeouts from that meeting?
Well, I think, as you said, COVID's had a big impact since that July meeting. We've seen a series of cascading lockdowns across the capital cities in Australia, and particularly quite a prolonged one in Sydney. So it's having a meaningful impact, and we're almost certainly going to see a contraction in economic activity through the third quarter. But I think what we've seen out of the last RBA meeting and what investors need to take away is that this time around, we're going to see more fiscal and less monetary. So we've seen some expansion and reintroduction of some of the support packages from the state governments and the federal government. But the RBA in their August meeting stuck to their guns. So they said they're still going to move along their path of slowly and at a measured pace reducing stimulus. So they've already let their term funding facility mature. They're letting yield curve control roll down the curve and eventually mature. And they've announced they're going to start to taper their asset purchase in September, and they stuck to that message. So I think the punchline for investors is more fiscal, less monetary this time around.
If we take that conversation further into thinking about some of our outlook, we've obviously just had our cyclical outlook come through, in that we talk about peak growth and peak policy. So moving on from, I guess, the monetary policy conversation and thinking more around how we're positioning portfolios at the moment, we've had a decline in yields since July, really, a 30 basis point decline in the 10-year. We've had equities that have risen. We've also got lockdown orders now in some of the states. We're talking a lot about vaccination rates, etc. How is this coming together in your thinking on how to put a portfolio together? And what are some of the key themes that are in our portfolios at the moment?
So I can talk to a couple of recent adjustments in our portfolio exposures, and really with that background in mind that we're moving into an environment with more fiscal and a pullback in monetary. And so what does that mean for portfolios and markets, I think is really important. And in the context, as you said, of a reset lower interest rates. So a couple of key themes. So in terms of duration or interest rate risk, we've more recently started to pare back that and get a little bit short duration or reduce our interest rate risk in portfolios versus benchmarks. That's at pretty attractive levels to do that now. And once again, as I said, in the context of a bit more bond supply on the fiscal side, and in the future, a little less purchasing from the RBA. So reasonably good levels to reduce our interest rate risk, I think. The other key theme in terms of sector themes, a couple that I think will play out over the coming months is underweight Australian banks versus global banks. We've liked global financials for quite a while, and with the expiry of the term funding facility, the Australian banks are going to have to start to tap more expensive sources of funding, and this will be slow moving. It's not going to happen overnight, but we're going to see more bond supply from the Aussie major banks. And the global financials, a good case in point is European financials, which we've liked for a while, have just come through a really strong earnings season. So I think we're going to start to see a bit of a compression in spreads, global financials relative to Australia, particularly some of those attractive European names. And then the third theme in terms of sectors would be semi-government or state government bonds. Yeah. So if you think of more fiscal as a little bit more debt for the state governments funded through bond issuance, a little bit less purchasing from the RBA, we're starting to see some spread widening in state government bonds. So this was one of the most attractive sectors last year, one of our biggest positions as we came through the pandemic, and spreads really compressed as the RBA started to purchase aggressively through the last 12 months. So we've pared back that position close to benchmark weight now, but I really think that's starting to look like an opportunity as spreads start to leak wider and we're seeing more fiscal and less monetary. So starting to hover over some semi-governments in state government bond space to start to add into that sector.
Thanks, Adam, for those comments, and thank you all for watching. Please keep an eye on pimco.com.au for further commentary regarding our outlook and some of our investment solutions. And please reach out to your PIMCO account manager if you have any further questions.